What's up, everyone? It's Caddy with MoneyVest. So markets here pushing higher very, very nicely ahead of the earnings season. I mean, banks already reported last week, but starting tomorrow, starting Wednesday, basically, we do have big tech, especially Netflix and Tesla, coming out with their earnings. So I think it's going to be very, very interesting how they set the stage and what kind of numbers they end up reporting. I've already done a couple videos on Tesla, so make sure that you do check that out if you haven't already. Links to our Discord and Patreon is going to be down below if you're interested in joining. There is a 16% annual discount available till the end of this month. And of course, you get access to all the MoneyVest stock reports, individual stock reports, as well as TradingView charts, the buy and sell alerts, options alerts, everything's going to be included. So links are going to be down below. And this right here are the 5 new stock reports that I shared with all the members. So this is going to be Viva Systems, fantastic companies, by the way. If you haven't heard of these companies, definitely check them out. Viva, Endava, Chipotle, of course, InMode, we've talked about that one, and Lululemon with the inclusion in the S&P 500. Did a video on that earlier today as well, rallying quite a bit on the day, up over 9 to 10% last time I checked. So Kathy Wood says the bond market is the key to resurgence in her favorite innovation stocks. So ARK Invest Kathy Wood said Monday that her innovation darlings are poised to lead the market once bonds start to rally and push down interest rates. So as we know that, ARK Invest and Kathy Wood are very much macro dependent, right? Their strategy is very macro dependent, and they really want interest rates to be lower in order for their strategy to work, because in a low interest rate environment, growth stocks, innovation stocks, tech stocks tend to rally quite a bit because we're using a lower discount rate, and present value of our future cash flows are worth a lot more than in a higher interest rate environment. So she says, and I quote, "We've seen very recently a shift into bonds, and interestingly, the flows into bonds would suggest that we should not be far behind. If bonds are going to rally, and we think they will at some point here as inflation continues to come down, as the economy continues to go through rolling recessions of sorts, we think that the backdrop will be right for resurgence in growth stocks generally, and in particular long duration innovation growth assets." And that's exactly what she has in the portfolio of ARK Invest and ARK ETFs. These are long duration innovation growth stocks that their growth estimates are 10, 20, 30 years out into the future. And as a result, they are dependent very much on a low interest rate environment. Now, again, we'll see eventually what ends up happening, but we know the Federal Reserve is very adamant in keeping interest rates where they are. That higher for longer narrative is going to continue unless, of course, either one of those two things happen. Either we get into a recession in 2024, where there's a lot of signals right now, there's a lot of indicators suggesting for one, or there is significant amount of deflation, which I don't see likely, but you never know. I mean, Jeremy Siegel and Kathy Wood have both been very vocal for a potential deflation in the economy brewing on the back of shelter prices, which have been lagging for quite some time. Now, Morgan Stanley says that the average stock is breaking down, and S&P 500 to fall to 3,900 by the year end. And this was, of course, from Mike Wilson. We covered that in one of our separate videos as well. But this is what the market looks like. Very, very strong rallies on the back of Meta here, Google, Nvidia, Amazon, Tesla, Microsoft, AMD. Apple here was flat, but everything else pushing higher, and we've got greenery across the board, and all 11 sectors were green on the day. So you'll notice every single one of them is up at least 70 basis points, if not more. Majority of them are up at least over 1%. So very, very, very strong day for the markets, and the market breadth was incredibly good. I mean, we've got all sectors leading the way here, with up over 1.2, 1.5%. So market breadth here, very strong. And this is what Mike Wilson also said. The majority of sectors are exhibiting weakening performance breadth. And this right here is the chart that would disagree, right? I mean, I'm like, you just can't make this stuff up, right? He highlighted utilities as the only sector showing any recent surge in breadth to the upside. Meanwhile, the communication services and tech sectors are showing the most notable equal versus cap-weighted underperformance, as both of these areas are seeing the largest weight companies drive up strong cap-weighted performance this year. And that is true, right? Most of the performance that we have seen in 2023 has come on the back of large cap, tech-weighted companies. And the bottom line is the breakdown in various breadth measures, cautious factor leadership in the recent decline in earnings revisions, and fading consumer confidence reduces the odds for a fourth quarter rally. I mean, these are just really, really weak metrics, right? I mean, consumer confidence, really? That's what we're kind of basing off of our analysis now? Like, this is just pathetic. Over the last 1 week, you'll notice that Again, all 11 sectors are green, so pushing higher. And over the last 1 month, of course, we got comm services, technology, and energy really just slightly higher. But of course, most sectors are down because we have been in this slow and steady lower high and lower low pattern for the market as well. Cocoa prices, platinum, Russell 2000, ethanol, Nasdaq 100, S&P 500 all pushing higher with volatility here dropping pretty aggressively. Bitcoin did rally up to 30,000 because it did get this false rumor circulating that the ETF, spot ETF has been approved or something. So you can see that small wick where it kind of rallied and then came right back down. Same thing with Ether, same thing with pretty much all cryptos. But we're slowly and steadily kind of making our way back higher. Now, I do also want to touch on orange juice. I want to give a special shout out to orange juice because orange juice has been a big part of our channel for 2 years, 3 years. I mean, it's been incredible. We've been talking about orange juice for quite some time in our futures update. A few of our members have even taken up positions in orange juice and they've been trading it for a while. So special shout out and congratulations to our MoneyVest sort of a, I don't know what it is. Maybe it's a mascot. MoneyVest mascot, Red Mike and Orange Juice are two mascots that we have on this channel. So Orange Juice has been one of the best performers, best commodity performers since 2020. It has gone up a little bit over 300%. So yeah, shout out to our community. Shout out to you guys if you've been trading orange juice, and congratulations. It's absolutely incredible. Now, all we need is a Red Mike ETF or Red Mike stock or something that's related to Red Mike so that can also rally to all-time highs. But I think it might be time for Red Mike to make a reappearance. I don't know. What do you guys think? Let me know in the comment section down below if you'd be interested in having the Red Mike. Once again, look, if the Red Mike comes, it's only going to bring deals. That's it, right? It's only going to come in front of the camera to bring deals. And I think that's exactly what we want. We want deals. We want good prices for the market so we can take advantage of that opportunity. So looking at S&P 500, very nice rebound, up a little bit over 1%. Now, if I bring up the moving averages, what we have talked about is a very nice support at around 4,200. So that's a very good area of demand and area of support. And right now we are once again getting up to that resistance at the 100 simple moving average. And that's going to be sitting roughly at 4,400. So that 4,400 level is going to be that resistance. Support level stays put at that 200 SMA. It's sitting roughly at 4,200 for the SPX. Now, this is still the downtrending channel. So this is still the lower high and the lower low. Let me just go over to a much cleaner chart. Let me see if I can bring this up right over here. So once again, we are still very much in the context of this lower high and this lower low. So we're not out of the woods yet. So I want everyone to understand that yes, even though the markets are still trading within the context of this uptrend where we are consistently making these higher highs and of course this higher low. So we are again in a broader uptrend within the context of this shorter downtrend. So unless the S&P takes out its 100 simple moving average, that is going to be sitting roughly at around this 4,400 level. And then beyond that, we're going to be watching this 4,500 level. That's the previous resistance right over here. Unless S&P takes out a couple of these resistances, I wouldn't be convinced that this is indeed a breakout to the upside and it's a shift of the overall pattern from a lower high, lower low perspective, from a downtrend perspective, back to a higher high and higher low pattern, and of course, trading in an uptrend, right? So we need to see that happen before we can confidently say that, okay, the pattern is indeed shifting. But right now, of course, very strong day, 1%, and we are once again getting back up to that 100 SMA and those resistance levels that we need to watch for S&P. Nasdaq here, on the other hand, identical pattern, something very similar, lower highs and lower lows. So we're still very much in the context of a downtrend. So again, I want to be very clear that we're not out of the woods yet. This right here is going to be that next resistance to watch at 13,800 to as much as 14,000. And we've also got this lower high to watch for the Nasdaq and a massive support sitting roughly in the low 13,000. Similar to what we have already discussed in our previous big tech analysis from a technical perspective. Now going over to Apple here. So nothing really has changed, but Apple did get rejected here. And then intraday, we saw a lot of buyers stepping in. So what you'll notice is just a lot of buying momentum here for Apple. So green candle on a red day definitely does suggest that there was a lot of pressure, upside pressure here for Apple, but it is still very much in the context of this downtrend. So right now, this is going to be a very, very important level of resistance, sitting roughly at around $179 to $180 for Apple. Talking about Amazon, and Amazon here also getting bought up very, very nicely. up over 2% here on the day, so can't complain. This is still the lower high and the lower low pattern, so I want you guys to be aware that it is still in the context of a downtrend, right? So getting rejected here, potentially getting rejected here. That's going to be that next resistance, sitting roughly at 137 and 138 for Amazon. Now, Tesla's an interesting one. Did an analysis on this in one of our previous videos. So this is the overall symmetrical triangle for Tesla. So up over 1%. And this is the lower high and the higher lows that it continues to coil in, right? So it's a very, very interesting chart. And the earnings are coming out on Wednesday. And I can tell you there is going to be a lot of volatility for Tesla. So if you do end up breaking down, I wouldn't be surprised if it comes down to 230s. There's going to be a lot of support here in the 240s, as we've already discussed, and a lot of resistance starting at 270s, 280s, all the way up to $320, $300 per share. So you got a lot of supply sitting up top. By the way, this right here is the chart, a much better chart to look at. And you'll notice that once again, Tesla here, consolidating sideways, kind of trading in that range. And we got a lot of resistance here, sitting in the 280s to as much as $300 per share. So this right here is going to be that resistance support level in the medium term, sitting at 240 all the way down to as low 200. So, there's a lot of levels to watch on Tesla here moving forward. There's just coiling in, and eventually I do believe there's going to be a bigger breakout for Tesla. Nvidia here, on the other hand, also getting bought up. So very, very nice move to the upside here. So, this right here is going to be that lower high, that horizontal high, horizontal high, horizontal high. So we've gone rejected there not once, twice, but 3 times now. And of course, support level stays put in the low 400s. So consolidating sideways, very much in this range-bound pattern for Nvidia. So that's going to be that level to watch for this company. Advanced Micro Devices here, on the other hand, continues to get rejected at $112. So this right here, very, very strong resistance for Advanced Micro Devices, and support level is going to stay put at close to low 100s. So if you get down to that level, of course, AMD is on my buy list. It's on my shopping list. I will be updating everything with respect to our shop list. So I will be putting together a new members-only private video going over all the 25 stocks with our new fair values, our stock reports, some of the risks that I will highlight for each company, and what my intrinsic value are, where I would be looking to buy or sell some puts. So that video should be coming out by the end of this week. So I will be posting it for members only. If you want to get access to all that, again, link's going to be down below. And you'll be able to, again, keep track of all the companies that I have on my watch list. In other words, our shop list with our fair values and what I'm planning to do at those certain prices. So again, link's going to be down below. We'd love to have you on board. Next one on the list is going to be PayPal. PayPal actually had a report today come out suggesting that this stock has 60% upside, or actually might be 200% upside or something. Few analysts actually believe that PayPal is going to triple by 2030, considering how it is still a leader in payment processing and the valuations are cheap, and it's still considered to be undervalued. So, obviously it's had a terrible 2022 and a terrible 2023, down 22%, continues to kind of trade in this pattern of lower highs and lower lows, and just basically it is a dead stock at the moment, right? It's not really going anywhere. Every single day it's just like up, down, just not really, there's not a lot of volume, it's kind of like a meh stock, right? It's not really doing anything. So the moment it breaks above this lower high, the next resistance is going to be at 65. So this right here is going to be that level, all the way up to this gap that may or may not eventually get filled. We just have to wait and see. But $70 is where this gap is, all the way up to this resistance of $76 per share, which kind of feels like a dream at this point for PayPal. But of course, eventually we'll find out if it gets up to that level or not. Square, on the other hand, is also struggling. So the entire fintech sector is under a lot of pressure. And this right here is still going to be that support level of $42, $43 with a resistance all the way up to $50, $51 for Square. I'm still taking suggestions, and I will be making a change very soon. We'll bump out Square and possibly Shopify, and then replace it with a few other companies. You guys have been suggesting some fantastic businesses, so we'll be kind of including them in our daily market updates. And we'll do our Square and Shopify analysis technically on some other videos, but they're not profitable, and just like S&P 500 has very strict criteria of inclusion, we're also going to continue to update our stocks that we look at and analyze on a daily basis. But Square here kind of consolidating sideways at $42, $43. Next one on the list is going to be Meta Platforms. Now, Meta continues to do really well. Meta and Google are actually one of the two companies that continue to do really well from a overall perspective of technicals and just the trend that we are seeing. So Meta got rejected at 325. Got sold off, of course, on Friday after the brutal sell-off in the Nasdaq and validated that support at 312, 310s. And on the day today, once again, back over 2% in the green, back over $321. So, this right here is going to be that resistance for Meta at $325, and beyond that, of course, we're watching all the way as high as $350. So that right there is going to be that next resistance for Meta beyond $325. Talking about Netflix here, and Netflix continues to sell off. They're also reporting earnings on Wednesday, so we'll be looking into those company earnings as well. And support level, of course, is going to stay put at 332, resistance all the way up to as much as 375, 378, and that is going to be turned into a resistance for the company at this time. So that's going to be that resistance level to watch for Netflix. Now, Google also, very similar to Meta, as I said, has been on a very nice consistent uptrend. So you'll notice that it's just been trading in this nice higher high and higher low pattern at the moment. And the next resistance is going to be at $144 with a new support now sitting at 140. So it's got a very, very tight range within which it's been trading at the moment. Talking about Microsoft, and Microsoft here also pushing higher, although a very weird candle. I guess RSI MACD is quite neutral, but it is coming from its lows. It's back higher. The Activision Blizzard acquisition is complete, $69 billion. And that's why you'll notice that this is now an invalid symbol. So you can go ahead and remove that. But Microsoft here buying Activision Blizzard, big acquisition. That next resistance is going to be $340 with the support level staying put at $311 for Microsoft. And last few names here, we got Enphase and Shopify. So Shopify here also just consolidating sideways right above that support, up over 3.3%. Next resistance is going to be $53, $54 per share for Shopify. And of course, support level is going to be with the gap here. So we've got a gap to fill all the way down to as low as $44, $45. And finally, we got Enphase, which was up very nicely, up over 2.63%. Back up to 127. Got a huge resistance at 128, and Enphase is also breaking out some of those moving averages, like the 21 EMA, validating that support, but at the same time getting rejected at that 50 simple moving average. So hope you guys enjoyed this video and a complete update on the markets here. The bottom line is we've got lots to look forward to with respect to the earnings that are coming out. We've got the Federal Reserve speech later this month. A lot of FOMC members talking this week, and don't forget, Jerome Powell is actually giving a speech on Thursday at 12 p.m. Eastern this week as well. So hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe. A lot of our stock reports are available, members only private videos, trading view charts, our shopping list, our fair values. Everything is going to be included with the link down below. 16% annual discount available till the end of this month. As always, happy investing. I'll see you all in the next video.